pisses me off so. I mean, Zoom. Stupid little things that they. I could program better than that. Zoom pisses me off. It has so many errors that are so easily programmatically correctable. Okay, so here, back to here. Wing. Randy, you need to check every one of those symbols I was talking about this morning on this page. Volatility, implied volatility. For free, you get to see all this information. What you want to see is you want to get a sense of what is the low end of average on that. Like here, I'll show you what I'm talking about. Put it in red, green. So to my eye, lately it's been quite elevated, and maybe this is an expected average. Typically, it's been something like around here. And so 4,000, 2,000, so 1,000. So we can expect about 2,000 a day, which is, you should know now. I don't know, maybe you're not experienced enough yet, but you should know that 2,000 options per day on their worst days, on their driest days, because obviously it does 4,000 and 10,000 and stuff. But on their worst days, 2,000. That's a nice net down there. When things go dead on the thing, it's going to dry up to like 1,000 on average. But you should know that 2,000 per day is a little bit on the dry side because you're talking about an entire option chain. All options traded across an entire option chain. So if I go over to Wingstop, we have 1, 2, 3, 4, 5, 6, 7. What do you call them? Chains. I don't know if they call those chains expirations. 7 of them. Uh, and so now you divide 2,000 divided by 7. That means 285 traded volumes theoretically per expiration, but actually it favors more the nearer ones. But since we go out 45 days, that's sort of in the middle-ish. So we can expect the average. So 285, and then now we turn the um, thingy my fucking jingy, which shows all the strikes, and we have something like 10, 20, 40, probably a plus or minus like 50. So now we divide, so there's like 50 strikes that are probably in the realm of active. And so we divide 285 by 50, and we get 5 options trades per day on the low end of liquidity. So you need to do a little bit of that. I mean, you don't have to do what I just did. I'm just proving. I'm going further and proving that 2,000 per day liquidity equals something like 5 options trades per day per strike. That's a little bit dry, but it's not bad. It's not terrible. Terrible would be like 150 options trades per day total. So you can see that over in Market Chameleon. Tab, there we go. And you need to do that right now on all those picks so you can get a sense for what you should or should not get into. Obviously, I mean, actually, it's not obvious. I was going to say, obviously, McDonald's is going to have liquidity, but maybe not. It's quite the value stock. Maybe it doesn't. And Starbucks, I would say, is a very popular stock. It probably has the liquidity. Maybe not. So you should go take a look under the hood of all those over the last year and get a sense for what's the reliable liquidity levels of each of those things that you're wanting to potentially get in this morning. So we got Starbucks, and on that it's down considerably pre-market. So on Starbucks, we'd be shooting for a short. So I'll put shorts on the bottom by getting a call credit spread. And your next one is PayPal. And again, we need to know the liquidity situation at PayPal. So you need to get that also. PayPal, and you need to share those with us. PayPal it blipped but it doesn't really seem to have a catalyst level of gap going on. So I don't even know that we'll trade that. Yeah, I don't think we will, but maybe. You certainly should do the research and get the liquidity levels on those. Zebra, Zebra Technologies Corporation. Where are you getting these names? Okay, because zebras. Well, I mean, it's good that you have it. It's better to have names than be missing some. All right, and zebra. I don't think that's interesting too much. Interesting. It's mm, good. I just don't think it's great. And I only go for great. Great or great minus. McDonald's. Yeah, there's nothing there. Echo. What's going on? Is this a day two? Tuesday morning was earning, so this is already too late. But it dojied. Yeah, you could potentially sell a call credit spread. I never heard of Seco. I mean, I probably have in passing, but like, I don't think it's well known. The liquidity on that's probably completely disqualifying. Seco, Pinterest. What happened there? Wow, Pinterest is way up. That could be interesting. Check the liquidity on Pinterest, Randy, on Market Chameleon. Get us that information. We have 9 minutes for the open. Pinterest, we definitely want to know. And what was the other one? Starbucks. And where are you fucking things here? Yeah, Starbucks and Pinterest we're interested in. And Pinterest we'll put right here. And then we also had Amazon. And Amazon, as far as I know, should be, I mean, like top 10. That should be liquid. We don't even need to check on that one. Amazon. I'll keep the market ones. Market ones different here in a different slot. Amazon. Okay. Yeah, Amazon's interesting and looking good. Uh, there's Pinterest. The other one you put up was CVS. Yeah, that one's having a very bad day, just like Starbucks. But CVS is now broken pivot. This is just going to flush it down the toilet, although there's a lot of support at like 50. 1, 2, 52, 52, it looks like. 52, CVS, kind of like who cares, low ADR, but the options, a call credit spread might out on that. CVS, okay, so we'll look for a possible short on CVS. Root, take a look at Root. Yeah, this is a shares trader's dream right here on Root. I don't think Root has option liquidity, but this is a share trader's dream. This is a gap up catalyst day open, 25% gap up over pivot. So this could be a break and run on something that's a holy grail that's already done over 1,000% return in 50 days. I mean, this fucker Root, like, it's like stock of the year. But it's a shares trade, and that's not for me. But Carl and Marcus, you should be like aiming at Root there. Like, pretty impressive. 5-minute dip buy or a 1-minute opening range breakout or a 2-minute opening range breakout, or even a inner pivot break or pre-market high break at 97. But I mean, who wants to wait that long? It's at 86 right now, 87. So Root looks amazing. And then now that's a $1 billion company. Lemonade, 1.2 billion. Yeah, it doesn't look good. All right. And you guys, we need to take a look real quick at the economic forecast calendar here for the day because at 10 we have JOLTS and PMI. So in 30 minutes we have JOLTS, which is jobs numbers, and then we have PMI, which is inflation related. And then the most important thing is at 2 p.m., we've got the Fed rate decision. Let me get this blaring screen off my face. At 2 p.m., we have the Fed rate decision and discussion and notes and report on what they're thinking. That's going to be quite revealing. That's going to be a big deal because we're sort of at this crossroads. We've hit this point where I believe the Fed may even want to raise rates in the future. So I think there might be even a drizzle of that possibility mentioned somewhere in there. Like they might say somehow they might do it in very passive language, but it could be as active as raising rates is still not off the table either, something like that. The market will just go boom when he says that. But the truth is that's the truth. If inflation keeps going, they're going to have to do something. Randy, you don't have to hold back. I mean, well, you don't have your portfolio hedged, I guess. But yeah, that could be fine. Waiting to the end of day is fine. I mean, if you're doing PCSs, you've got time. So anyway, that's gonna be at 2 p.m. And then we have some dark pool prints. If you guys see them over here on the QQQ and the SPY, Thinkorswim is patched in. However, somehow they are able to show some dark pool prints. They must have that through their reciprocal relationships. But some dark pool prints have occurred at yesterday's close, and which we're very close to. But it just means that, and big one, three of them. I'd never seen that many dark pool prints. Never on Thinkorswim. Three before, and they're all set at exactly yesterday's close. So those are like gravitational pools to liquidity. A dark pool print is when hedge funds they're all trading together amongst themselves, like place your bets kind of thing. And instead of putting it on the stock market, they do it between each other. And so it's a private trading pool. And they call it a dark pool because it doesn't exist in the light. It doesn't exist where we can see things. It's amongst themselves. But there's, several, high-end international global trading pools that big money likes to place trades in. I mean, they may be market makers, but what they're doing in the dark pool is not market making. Okay, like market makers might have enough money that they're doing that. They're placing their bets in the dark pool, but more than anything, it just tells you that there's a gravitational pull towards those levels, and that some liquidity will be happening there. And it could be an equal trade as far as, money is one guy's short and one guy's long, long at the levels. Like someone's taking that trade, the other side of it. So it's always very hard to say whether or not that means everybody's going to be going short there or everybody's going to be going long there. But what those dark pool people are doing is they're going to do something there. And so it creates this uh, and they're smarter and more connected and can make things happen. And so sometimes it's a couple days later or whatever, but you get these dark pool prints, eventually they get hit. So this morning, Starbucks and all these other things, and maybe Amazon's not enough, maybe we bleed out for a long time, and then the Fed speaks, and somehow it's positive, and then and then we start moving up towards the dark pool prints, towards yesterday's close, and now we're green, we're moving green, and all of a sudden, dark pool was right. It's always interesting how eventually we do hit those dark pool prints. They're just gravitational liquidity lines in the sand that usually get hit that same day, but sometimes can be as much as a week later. Oh, but it usually is within 3 days. But probably the most frequent is the same day. Sometimes it doesn't though. Doesn't happen. So anyway, though at 10 in 30 minutes, don't forget some jobs and PMI information is coming out and then Fed at 2. All right, here's the open. Right. We are 10 seconds into the open. CVS is dropping like a ton of bricks. Root is not holding up. Pinterest is moving. Pinterest is looking quite good. Did we get the liquidity check on that? I was asking you to do that, Randy. Did you get that? I need a liquidity check on Pinterest, but I guess I'll do it myself. Oh, it's very liquid. All right, we're good on Pinterest. All right, Pinterest. We're coming up on 45 seconds here. Oh well, you better open an account and start working with that. 21st of June. 20 delta is like the 32. 32 is way down there. And we are now 1 minute after the opening bell. There it is. That's the entry on Pinterest. 32, 36. All the deltas just changed on me 1 minute later. All right. Man, what is this? 30, 36. I don't want the 30, 36. Wait, the liquidity is rather low on these at the moment, or that they should be better. Wow. Am I gonna have to get 10 contracts? Get 20? All right. What's going on? Okay, Pinterest is already falling. Pinterest is already crapping out. So it's 5 minute entry signal, fall back to 5 minute entry signal. Thank God my order didn't go through because it's not working out. And Amazon's dropping and the market's dropping, Root's dropping, CVS is dropping, Starbucks is dropping, but CVS now, let's see if it offers a CCS for us. CVS with a CCS. Oh, the strikes are not good and the option liquidity not good. Good. Stay out of trade. See, I mean, this is amazing. I love that about this system and the rules of the system is, you might get frustrated because you can't get in things and things are doing, what you wanted to get in them for, and yet you can't get in and then suddenly it doesn't work out. And it turns out, or suddenly, it could be a few days later, turns out that that was the right decision in that moment for the rules to say, no, don't do it. So at the moment, Pinterest wouldn't have qualified on the option liquidity. So none of you should have been able to get into Pinterest. The rules, no good there, but you could have gone for shares, but you would have just got knocked out. You're out when it broke low. And now it's a 5 minute dip buy strategy. Amazon's bleeding out. That's no good. CVS is now getting supported. Starbucks, is moving a little bit lower. Starbucks could possibly be a call credit spread, but let's take a look at those liquidity on those. No, see the problem with Starbucks and the problem with CVS at the moment is the strikes they offer. Their deltas are way too skippy. They're not granular enough. So you got 33 delta, and then the next one is 14 delta. That's too much width on the deltas, you guys. You want it 22 and 17. I mean, you want those deltas to be reasonably spaced out. And it's not so much that it's the strike's fault. Well, it kind of is. Um, but yeah, that's going to be a big problem. Put that into your, quality qualifications. Oh, Wing. Why do we not have Wing up here? Damn it. I wanted to get Wing. I hope Wing's not flying. Oh, good. It's bleeding out. Excellent. All right, let's take a look at these on the bigger chart here. Wingstop. Okay, I'm going to go for a call credit spread on Wingstop if it offers it. in a manner that is liquid. So I'd be looking at like the 420. I don't know. Let's see what's the 20. 23 is the 430. Oh God, the bid asks are so wide. So there we go again. So we can't get into anything this morning. What were the other ones? Pinterest, McDonald's. What's McDonald's doing? Base materials are flying. That's very strange. Industrials and financials. No. Staples and financials and utilities. That's all calls to safety. Boy, um, the market is bracing for an impact, but we've got numbers coming at 10 o'clock and uh, the Fed at 2. So, I mean, well, it's a smarter thing to move your client's money to safety. So that right now looks like getting out of growth and getting into financials is rotation, utilities. I was going to say healthcare, but no. And consumer staples. As well as it looks like industrials. So I saw there's a bracing for impact going on out there. Market is doji at the moment. Doji, doji. Oh no, actually, the industrials are slightly moving up. Back to all those positions we were looking at. Pinterest, nothing's really turned around. They've all had a little bounce here at the bottom, but nothing's really turning around in any trustable fashion. It is now 6 minutes past the hour. And I'm going to go start checking up on my portfolio, see if there's anything I need to mess around with. All right, let's see. The largest blip is on Nvidia. Little pullback, nothing too crazy. Marvell. Yeah, that's doing all right. Dash. All right, you guys need me to check on anything, let me know. Dash, oh, is that going to be reporting after hours? It is. So I got to get out of Dash. And this should be a profitable trade, but I guess Vega is really working against me on this. I'm gonna let that gestate a little bit. If I can close that out at a little bit of a better price before earnings on Dash. That's another PCS rule, by the way. I forgot to mention and realized I forgot to mention the fifth rule for managing your credit spread portfolio positions. You must exit before events. So that'd be like ER, or let's say they're going to have a what do they call it? A conference, or someone's going to be speaking somewhere and they expect it to move the needle a lot. CEO is going to be speaking, something like that. Any events that are coming up, you need to sell before events, and that includes dividends for sure. Well, in the most part, if the dividend's extremely micro, then it's not going to change anything. You might not know this. I think some of you do, but you might not know this. But when the dividend is released, the stock goes down the amount that the dividend was released. Like, how stupid is that? In some sense. And so, in other words, you're not really making anything. They're giving you your own money. They're paying you the dividend out of a drop in your capital. Stupid. And then the only reasons dividends like quote unquote work is because the stock itself is in an up cycle, and they expect that gap created by the dividend to fill and continue on. But it's a momentary road bump in the road, but par on par, what would you say realistically, they're giving you money out of your own money, and the rest is just, so you should be less interested in the dividend rate and extremely interested in dividend recovery. So that'd be like after a dividend's released, how soon does it recover? How reliably does it occur? How often does it recover? How long does that take? What's the shortest? What's the longest, amount of pain I'd have to go through? All that kind of stuff. The places that dividend investing works is when you're going to do at least a 20-year hold on something, not just 10-year, 20-year. I mean, 10-year will be an absolute given. 20-year would be like, yeah, maybe I'm going to sell in 20 years. But like, if you're going to go 20 years, you might as well go lifetime. But whatever you're investing in should be solid, 20 years solid in your forecast. And you will get that wrong sometimes. So good luck on that. Cart is doing well. Why did I just bring this up? I guess I was just checking everything here. Why are the pricings on cart so weird on the bid ask spread? That is completely wrong. I am almost at break even. 34.32. Yeah, I've got this correct. Okay, so that's just gonna like correct at some point during the day. Checking my positions here. You're only in GCT right now and it's at minus 45%. I also have that and I'm probably down as well. Yeah, I'm at minus 52%. GCT. All right, yeah. I mean, we got in near a pivot high, unfortunately. But maybe we'll see that swing in our favor soon. The rules are the rules, keeping us in the trade and all. Yeah, Kava Rumi, I still have clinging to last, I think, okay, two contracts on Kava, and it's at 52%. App looking good. I'm still trying to get out of SE and just trying to get out for 100% max profit, which is a penny essentially. Zero would be 100%, so a penny would be like 99.9 in this situation. So I'll put my order out there for the day on that. Add a penny. See if there's any takers. Wow. DJT moving in the right direction. Wow, look at that. Very nice. Very pleasant. I'm now at the profit point on DJT, and that is after a 21 days sell rule on Friday. So I'm in it 3 days longer than I should be, but I'm using my own discretion and experience to do so. But here I am at where I'd like to get out. Now, where's DJT? The price I got in at was $1.01. And so I need to be getting at least 50 cents or less to buy it back in order to get that 50%. And it's blipping around. So like right now it just blipped over to 63. So anyway, I have 5 contracts so that I'll put one order in at 50 cents, which is exactly half for the day, and we'll see if that happens. And I'll get a bling at some point. Excuse me, if it does. And then I'll be able to go back and look at what was that? And, oh, it was DJT. The contracts are selling off at 50% profits, and then I'll put in the rest of my orders. So come work in the position. Looking also at NTNX position. Okay, that's doing fine. And how about these bearish positions? Almost all of them are profitable now. Well, 4 out of 6. So Costco is now at Costco. Where did that go? 38%. It's under pressure. ANET is at 55%. So that's ready to be taking profits on. And let me see if I have multiple contracts or what. Okay, I do. So we'll take one on that. Take off that. No, 60%. Neighboring increment to get a little aggressive on it, work in the position. Meta is right about at entry. Yeah. So the thesis here was Meta's under a lot of pressure with a big, huge drop like that. And at the time that I got in, it was red, but for the rest of the day and at the end of the day, it reclaimed almost completely. But it was correct. That high did act as a resistance that day. So the thesis was holding. That gap remains like pressure on Meta. And for the last 4 days, it has rejected off of the top of the ER day drop. And so that's why I put a call credit spread on it, basically going short on it under the premise that it's going to be under a lot of pressure. And the interesting thing is my strike is a way above, not way above, but a little bit above the top of that gap. So there's so much thesis packed into that, because you have resistance of just getting over the other side of the drop day. And then you have the resistance of the gap area and the gap, bottom on the top. And then I have my strike on the other side of all that. And so it's like, it's like a double fortress or a triple fortress uh, with a moat around the middle with crocodiles. I mean, this is just uh, a good thesis of a trade to have put on and gestating and baking in the oven. So we'll see how it plays out, though. You never know. You never know. You could be completely wrong, and just gotta, good thesis is good thesis. You have to be prepared to be wrong. Um, the market. They say the market can remain irrational longer than you can remain solvent. ENPH, even though it's at like just about my break even line for my call credit spread on that and it being under pressure and in a downtrend and all, for some reason that is showing as a negative 50% right now. I think by the end of the day, that's going to go closer to zero, and just any blip underneath here probably send me right into the profit zone. The Dow call credit spread I got for the Dow being under pressure also is in the profit zone now. Well, there's a bunch of positions that I have. If you want me to look at anything, let me know. We've got the meters are about 55% bullish here. And across the board from the open, we got numbers coming in 13 minutes though. And then as far as what's got the most relative strength on the S&P 500 this morning, 500 stocks, at the top is Tech, TECH. Okay, that's because of this huge um, earnings reaction, which was really good, but it's not quite over pivots, and it's not on any exceptional projected end of day volume. And it's biotech, is literally called Biotechne. And so, it hasn't broken any pivots, not blue sky, it's not on catalyst volume, it's in bearish trend. So there's not even a single reason to even check liquidity. There's not even a single reason to get in this tech, and yet it's at the top of the market. Garmin, I think there's the map people, right? I believe so. Um, that looks outstanding. Look at these bounces off of the 200. Ooh, boom. ADR is only 1.73. Today's doing 5% of a move. This could be a never look. I got to check the liquidity on this because this could be an easy PCS. Nope, the liquidity is very low. And but I will still check with hopes. It goes from 23 to 14 as far as the delta skips. And we got a 20% spread. That's kind of sketchy. And this is the best day it gets, remember. The liquidity on a day like today is the best it gets. So unfortunately, no go on Garmin. Could be a shares trade for some of you guys though. Neo shit. Spotify. It's not a catalyst, but anyway, RS wise though, AMCR is in spot number 3. Nope. Yeah. DD. Nope. See, the instant reason why I'm instantly rejecting these is yes, they're strong. Relative strength is really high on the market. They have had a beautiful move off the open, and that's causing them to go at the top of the relative strength list on this S&P 500 stocks. But this is not in an uptrend. it's a typically 1.6% ADR stock. And if this is indeed, because this is a pivot breakout, if this does indeed constitute day one of it becoming bullish and reversing and getting over the 200, well, it's tried before a couple of times. But if this is it, uh, you know, it's just not enough. There's not enough cards stacked in our favor. Have you ever heard, of concepts of card stacking in like sales? Keep stacking positives on people, and eventually the overwhelming, like 9 out of 10, let's say they have one negative that they've mentioned about something, and then you keep showing them all these positives, you know. Now all of a sudden they have 9 out of 10 things in their mind are positive about the thing, and there's still that one thing. But because of the card stacking, you've made the decision a little bit more difficult for that person to simply walk away based on their one negative. Maybe that, it's a car salesman. Maybe the one negative is I don't have enough money. So, well, they have ways to fucking get you around that too, with the loans and everything. But that it works. Because the next thing you go to thinking like, I'm just not even ready to buy, I mean, they just dispel every one of those. And then eventually you have all these cards stacked and the car is awesome and this or that, and you're going to save so much money on gas. And they keep stacking it until they finally get you over to a table. That's all they need, so it's a sales tactic, card stacking. And so, and what I'm saying is, on these stocks, when you're building your thesis, you do need a lot of cards stacked in your favor. And the best ones have no negative. I mean, probability wise, I mean, you could say a negative about anything. What if Apple goes bankrupt while I'm in the trade? You know, uh, y- Boy, that'd be interesting. Knock on wood, but like, wouldn't that be interesting someday to see Apple in bankruptcy proceedings? Holy fuck, that would be crazy. In my lifetime, that would be very interesting. Wow. Just to think of that. It definitely would be Tim Crook's fault if that were to ever happen. But God forbid. In Cuba, when they don't allow import of cars. And so consequently, almost everyone in Cuba is also an expert mechanic. And then the expert mechanics, like real honest to goodness expert mechanics, are like they can fashion you a the what do they call that? I forget what they call that, but they can make the engine parts for you and weld this and that. I mean, so consequently, they have like all cars from like the 50s and the 60s in Cuba, and they're all like in tip top shape. I mean, can you imagine if you took care of your car so well? I mean, the way we uh, treat our property as uh, privileged persons, is almost grotesque when you think about it. Because in other countries, they have to do so much better than you with less. And yet, this is the sort of um, wasteful way that extremely fast growing economies and societies run. We're moving so fast at breakneck speed that the opportunity cost of sitting down and working on an engine part for the next 3 weeks in your garden versus versus you know just finding someone to buy your used car and then buying a new car, and then the difference between the money you saved and the money you could have saved and the money you spent is easily could be made up by the economic growth that you should experience from your society. I mean, it's just, this is just a wastefulness is just a byproduct of extremely fastly growing societies. Cuba obviously is not an extremely fast growing society, and neither is, I don't know, uh, Philippines or, certain places. Well, all right. We're coming up 5 minutes on the numbers on the market, so we might as well wait a minute for that. Let's check that out. Let's give it 5 more minutes. But there's really not much more to check on. I mean, the market for sure is just dojiing, it's just waiting. The real, reaction is coming. And where am I? All right, I'm doing great. I can never complain. Sell in May and go away. Have you heard that old trader expression? Oh yes. And here's May. So get ready. It's remarkable how few people showed up for the stream this morning. But hey, everybody's got their thing they're doing, and how seriously they're taking this. But everybody, it could be just a coincidence. But we usually have quite a few people in here, and we have people chatting in the trading chat. So it's just strange. Maybe people just did that. They just went away, sell in May and go away. CVS is flat. Everything is flat right now. So everything's waiting for the numbers in a couple of minutes. That'd be Jolt's numbers. And if that turns things around, you might get some triggered entries. Amazon is perking up right at pole motherfucking position. I think Amazon wants to be a bull, to be bullish. I'm gonna go check Amazon. I'm gonna prep a trade. I'm still gonna use a 1 minute opening range breakout technique or 5 minute dip buy to get into Amazon should the market somehow cause Amazon to break and run freely. So anyway, the 20 delta down on the bottom is, or 19 is 167.50. That's way down here. God, that seems so close by. Not sure I love that. Seems a little bit contracted down there. What's the percentile? 39%. Yeah, IV percentile is a little low right now, and that's what's causing that and not to be fat and expanded in its range. I would definitely want to get 165, and that is a 16 delta. It's really not lucrative to go after. I'm afraid Amazon is not really offering the right. Excuse me, guys. Sorry, I don't know if that cough was really loud. The right parameters for our system. But as excited as I am about Amazon perking up, yeah, I don't think I can go after it in our system with credit spreads. Perhaps with shares, it could be a good trade. All right, we got 2 minutes. 2 minutes until numbers come out. Jolts and PMI. Somebody else writing data coming at 10 a.m. Ben Carson said, "We've been conditioned to think that only politicians can solve our problems. But at some point, maybe we will wake up and recognize that it was the politicians who created the problems." I think we all know that. Politicians know nothing. That was the beautiful thing about Donald Trump. Was he actually fucking went economics major, like Elon Musk went to the same school, and Warren Buffett and Donald Trump, they all went to the same. They got the major in economics from the same school. It was nice to have somebody who could actually use their brain mathematically in office, regardless of how, you agree with his politics. It's somebody that uses their brain, not a politician. So that was what that big shakeup was all about. Now, no, everybody, it's gotten so much soupier and mixed. Okay, data coming in 59 seconds. Okay, 25 seconds. Excuse me. Is that loud when it does that? I kind of like it. I've got some kind of cough going on. Sorry. All right, here it is. Bam. The report is out. Excuse me. And jobs came in a little low, but not too bad, but a little low on jobs. That's good. That means the Fed might not touch anything. And PMI came in a little low. That's de-inflationary, slightly. So it's kind of good. I mean, it's not bad. It's kind of good, but hey, who the fuck knows? Trust me, the market can remain irrational longer than you can remain solvent. So, uh, the prediction about where things should be definitely wasn't on. So they were off on that. But it was kind of like a yes and a no. It was kind of like a positive and a negative. So it'll be interesting to see which one people freak out about the most. But basically, PMI people got one number, which was interesting. It was good. And then jobs numbers came out bad in just a minor way. They were all almost, they're very close. But now by the end of the day, how will that reflect on what the Fed says? It's we're kind of in line. I mean, it goes with what the Fed said, which was that things are going to wiggle. That they don't think that a wiggle down or up constitutes anything. And so I think that that's good policy, and that that's what's going on. We're just kind of it's just like topping action. It's like the economy is just sort of just it's like everything is sort of flattened out, and we've had some things wiggling in directions we don't want them to wiggle in, but they haven't really trended in those directions enough for the Fed to have been any aggressive at all. But it'll be interesting today at 2 p.m. to see now how the Fed feels, even including today's data. They might even be able to mention that. But over the last since the last meeting, in information and decision information, um, there could be some change in mood from the Fed. And my prediction on that is that I believe the Fed is going to become slightly more aggressive and less dovish. But the thing is, that doesn't mean that what I'm saying is I believe they're going to get closer now to doing something. That's kind of like what hawkish means. They're going to get closer to doing something with rates versus pushing it off more. So I think that I pushing it off more eventually becomes pushing it off to infinity, to where it's flat, to where it's like we don't know indefinitely, we'll stay here, to flipping the script and saying, you know what, maybe raising a quarter point isn't off the table. That's kind of baking in the oven right now, so it's hard to know how this is going to be, how this is going to come out at 2 p.m. But that's my prediction, is that not that he's going to say something about that a quarter point raise is on the table, but I think that the numbers will flatten out for longer potentially, and that won't be good for the market. And if there's any mention of the possibility of raising rates, of course that won't be good for the market. Well, you can't really say that for the market, for the growth market, but it also will depress a lot of other, stocks market wide. But obviously, value stocks are and staples and defensives and all that kind of stuff will remain fairly resilient and retain value. Whereas growth stocks would not like to hear that kind of information. and adjustments to their growth trajectories will be made. And then a certain degree of sell off will occur in order to meet those investing ratios between value and growth for capital management managers. That's what happens. All right. So, anywho, that's it for this morning. Be safe out there, trade smarter, and see you back in the group. Thank you very much, everybody. Have a good